Welcome back, everyone. Welcome, my crew. How is everyone doing this fine, whatever day you're watching this video? That was a fluff. No. Okay, so how is everyone doing today? Welcome to another video. This week, we're going to be talking about something very important. We're going to be talking about the top 5 mistakes I made when I started investing that bag. So stay tuned, we're gonna get into it. So mistake number 1 that most beginner traders make, and I did myself, was not figuring out your why. I know you're like, Nathaniel, this why again? You've talked about it the last 2 videos. Why do we gotta talk about it again? Because it's important. When I got into it, I was like, you know what? I'm gonna invest in the market. I'm gonna make millions of dollars, and that was my why. I'm still here with fake jewelry and not making millions. But that's the issue, is that my why was very superficial, right? So when I actually took time to sit down, to actually journal, to actually figure out what my why was, I was a lot more successful when it comes to psychology. And I was a lot more successful in actually my trading, because now my goal was not oriented around money. It was actually oriented around a lifestyle choice and wanting to change how I actually live my day-to-day life. So for example, what do I mean? If your why, it was my why initially, to make millions of dollars in the market, guess what? You can make infinity. You can make all the money in the world when it comes to market. The market, there is no limit. There's no finite amount of money you can make in the market, which is why you have billionaires and there's no trillionaires, billionaires, trillion, I don't know, whatever. You can make a lot of money in the market, okay? And a lot of money that is not finite, right? But you can also lose a lot of money, if not everything, right? That is finite, because once you lose zero, get to zero, that's everything you have. So probably don't go that way. What I'm trying to say is, if your goal is just to get rich, hey, I'm not busting anyone's chops if that's your goal is to get rich. But I don't think that's a sustainable goal, because if it's to be, for example, financially free, or if it's to build assets, that is a goal that you're actually going to work towards, that will create what we call residual sources of income that you're just sitting back, relaxing, and doing nothing. So if you want to get rich, cool, that's awesome. I think we all want to get rich, but I think defining your why is very important, and making sure that your why coincides with a lifestyle choice and not necessarily a finite goal like becoming rich, okay? So that's the first mistake I think all beginner traders, all beginner investors, anybody that's really trying to get into this idea of financial freedom make, is that they don't understand their why. The second mistake that all beginner traders make is not investing enough time. Oh my gosh, I saw this in myself. I saw this in some of my friends that got involved in investing. You know, how is it that we go to university for 4 years and it's like, oh, Nathaniel's a guru, now talk to us. No, it's true. 4 years of university. So in my case, I did 4 years of university to do biomedical science. You finish 4 years, you invest all that time, all that studying, all the sleepless nights, the caffeine addictions, the ramen addictions, for what? For 4 years of education. So it took you 4 years to get a bachelor's degree, an honors, whatever it was, or a specialist in whatever program you're in. 4 years of studying. So why is it when people get into the market, they think they can just do 2 hours of work and I'll get the market right away, that they can just understand it? I'll tell you my personal story. It took me 2 years, 2 years and 8 months. Yeah, almost 3 years. 2 years and 8 months of just studying, understanding, reading, back testing, trying, failing, trying, failing. You see a pattern? Failing a lot of times in order to get to where I am, that I actually can post profits of 5-6 grand a day. But it took me 3 years in order to do it. And all 3 years of studying, 3 years of really trying. Now, I'm not saying that's typical. Some guys may take a lot less, or some ladies might take a lot less, right? Some might take a lot more. But that was my personal journey, just because of the individual that I am, how I like to do things. I take a lot of time and I make sure that I understand all the details. I know those of you watching me, you're like, oh, it's because you're in science. Maybe it is. Who knows? Who cares? But anyway, that second mistake again is not investing enough time in your education. When it comes to investing, something else that's very important is that we call it a learning curve. Everything you do in your day-to-day life is a learning curve. Learning how to ride a bike. You don't know, then you know, and then you just remember it for some reason. You could be 8,000 years old and still know how to ride a bike. It just is what it is, right? But there is a learning curve, right? So not investing enough time into your education of the market, or investing money, business, finances. Oh, boring words, finances. Trust me, once you get into it, you realize that it's actually not as boring as people make it seem. You have the guys that are kind of the older generation that like to look at the analytics, that like to look at how a company is performing, which is important. It's extremely important. But that's, I think, where people get stuck into the business side and be like, oh, that's boring, right? Modern ways of making money, okay? The other mistake with this second, so it's like mistake two sub 2.1. And he's laughing behind the camera, but he's like, I don't know. Anyway, yes, 2.1, let's just say, okay, is a mentor. Now, I personally did not have a mentor. I saw a lot of guys that were, reaching out to me being like, hey, do you want to learn the markets? It's going to cost you $10,000 per month. I'm just like, no, right? I'm the kind of person that I tend and like to do everything myself. The issue with that is it took me 3 years, right? When you have a mentor and somebody that you trust that can kind of hold your hand and walk you through exactly what's important, it can definitely reduce your learning curve by a lot, right? Small plug, potentially mentoring coming. Link may be below in a couple weeks, so just look there. So if you want a mentor and if you want somebody that mentors, just look at what these people do. Look at their verified broker statements. I keep saying this 1,000,001 times. There are so many guys that are like, oh, I make this much money, that much money. Show me how much you make. Show me your verified broker statements. I'm very transparent. If anybody asks me, I'll be like, I lose a lot of money in a day. I gain a lot of money in a day. At the end of the day, I'm net profit. Okay. That's my strategy that I've built, that I figured out that works for me. My strategy may not work for you. That's fine. I'm not saying you have to use me as a mentor. You can use somebody else. But at the end of the day, if you feel you want to decrease your learning curve, I would say definitely go the mentor route. If you feel you don't want to and you're just like, I'd prefer to just do it on my own, read if it takes me 3-4 years, that's fine. I have the time. Good for you. That's what I did. And guess what? I made it this far. It just may take you a little bit of time. So again, invest in your education, invest in a mentor if you really want to, okay? And a big point that I want to add here is that I know there are many guys on TikTok and Instagram and YouTube saying, oh, you should invest your first, $1,000, next video to come, in like books and video. Why? Why? What is reading gonna have to do? Like, I get it, reading is important and understanding that is important. Like, the biggest one is, I think it's Rich Dad, Poor Dad. I think that's the title of the book. I could get this wrong. Don't tear me apart if that's wrong, but I think that's the name of it. It teaches you actually the mindset of investing, right? I personally didn't read it. I know what the book is about because I don't see value in reading about mindset. That's something that you have to develop yourself. So I definitely would not, and this is my personal opinion, I would not say invest in books. I would say invest in a mentor if you really want to. Invest in simulators, invest in education that actually will help you in the markets and help you develop your own mindset and own strategy. So that's number 2. That was a long one. I apologize. Number three, which will be here or there or here, wherever Manny wants. Right, maybe here. Who cares? Number 3, okay? Practice as much as you can, guys. There are free charting softwares. There are paid charting softwares that are actually relatively cheap per month that you can actually back test and test your strategies. Test the market with paper money. And for those of you that don't know, paper money is just basically fake money, like monopoly money, where you can trade in the market live, but you don't actually affect the market. You're just following the wave of the market, right? So if you want to know any free charting software, my Instagram will be at the bottom. You can DM me. I'll definitely let you know the ones I use personally. But practice, I can't stress it enough. I have been investing, day trading, swing trading. No, I haven't done options. That's a lie. But anyway, I've been trading for 3 years and I still use a simulator, okay? Because I want to prove to myself and I want to prove to people that, listen, practicing never goes away. You may be awesome, but there is a risk tolerance that you have to have. And my risk tolerance is, let's say, $200 lost a day. That's not what it is, but as an example, let's say $200 a day. Once I hit that, I don't just want to walk away from trading. I still want to practice my strategy and say, listen, does it actually work? Because you get into psychology, which again, we'll talk about in another video, and you really want to make sure that your strategy works. So I still practice in a simulator. When I'm done my trading for the day, if I have some spare time, I open up my trading simulator account and I'm like, let me use the exact same strategy that I would in my real account. Let me see what I can do and what I can get. So practice, guys, please practice is the most important thing. And practice with, what's the word I'm looking here? Intent, that's the word. Practice with intent, which means don't just passively sit there and be like, oh yeah, like I'm just buying and selling. No. Figure out a strategy, something that works for you. If you like my strategy, cool. If you like somebody else's strategy, try it. Whatever works for you. Indicators, we'll talk about this in later videos. But anyway, practice your strategy so that you can become the best trader, the best investor, the best you that you can be, right? This was one of my biggest mistakes because I basically opened a simulator account and I started trading bigger stocks. So actually my bigger stocks that I was trading were like Microsoft and McDonald's, I think were what I was starting. And I remember one day, it was last year, June, end of June, beginning of July, Microsoft had a huge spike. It went from like 194 to like 217 or something like that. And I made that day like it was like $600. I made that day, 650, I think it was. I was so happy. I'm like, oh my gosh, my strategy is awesome. This works perfectly. I opened an account, I lost $1,000 in 2 days because I actually wasn't trading with a strategy. I just thought I was, right? Oh, what do you mean you thought you were trading with a strategy? You put in money into a stock, it goes up, you think your strategy works. No, that's just luck. That's just a fundamental. That's something that in the news had brought up the price of the stock. Doesn't mean you were super smart. It just means you were potentially super lucky at that point. And in that case, I was. I didn't practice enough, and I thought that I knew the market when I really didn't at that time. So practice is mistake number 3. 4, mistake number 4. Guys, please, and I'm begging you, don't do this because I still do this. This is one of my top 5 mistakes, but it's still a mistake I currently do, and it's called FOMO, fear of missing out, right? For those of you that don't know, because I actually just learned what FOMO was like a year ago. I know, old man, whatever. FOMO, when a stock starts moving. For example, those of you that know, probably you all have heard because it was huge in the news. It was huge on Twitter. GameStop, GME, to the moon, diamond hands, woo, monkey on rockets, whatever. That was FOMO. Guys lost a lot of money because they were really scared of missing out this huge explosion going up. They put a ton of money into it without a strategy, just put money into it and lost. I know guys that put thousands of dollars into it and lost thousands of dollars. Thankfully, because of the strategy that I use, I was able to manage my risk properly. I actually caught some of that wave, but I only traded it for 2 days. And I didn't trade past that because I managed my risk and I had a certain strategy that I was following. So mistake number 4, it's a short one, FOMO. You've really got to take into consideration your psychology. Don't worry about what the market is doing. There will always be more opportunities tomorrow. There will always be opportunities missed. You can't catch everything. All you got to do is find 1 or 2 really good opportunities to get in, and that's golden. My golden rule is I just need 1. I need 1 stock that's doing very well that I can eat off for the entire hour that I'm trading. Other than that, I need nothing else. 6 stocks could be skyrocketing, or 1 could be doing better than the one I'm trading. But if this one is giving me success, that's the one I'm trading. So FOMO, don't let it consume you, okay guys? Mistake number 4. Mistake number 5. Mistake number 5. Biggest mistake all beginner traders make, and you are going to hear this and you're going to say, why are you talking about this again? Risk management. Risk management, risk management, risk management is super important, ASMR. It's super important, guys, risk management, because risk management will determine how much money you make in the market or how much money you lose. Risk management is basically saying, how much am I willing to risk in an individual trade? So for example, I don't ever condone going to a casino, but let's just say for, what is it, 21 plus now for a casino? 19 plus? What is it, 21? I think it's 19 here, 21. 19? Oh my God, I've been to a casino once, twice, 3 times. Anyway. 19 plus, whatever. You got to be older, okay? Older, you got to be older. You got to be able to drink, all right, to go to casino. Let's just say that. When you go into casino, you have $200, right? You're not going to go in and be like, I have $200, but if I lose this, I'm taking out $1,000. You're like, no, I have this $200. I'm going to see what I can do with it. If I lose it, I'm done. I'm gone. I'm walking away. That's your risk tolerance. Your risk tolerance is $200. The market is no different. You have to have a risk where you're willing to go into a trade and say, after I lose this amount, this is what I'm willing to gain. And I can't stress the importance of this, okay? Because as you build up capital, as you build up more money in the market, or as you build up more money as you invest, your risk tolerance tends to go up. But it only goes up not based on the percentage you're willing to risk. It actually goes up just based on your capital. So what do I mean? Here. All right, $10, you're willing to risk 10%. Let's just say 10%, okay? That's $1. So you're willing to risk $1 out of your 10. So you're willing to risk 10%. 10% is a huge amount to risk, I'll be honest with you. I personally only risk 2 to 3% per trade. That's as max I'll do. But for this example, we'll use 10%. But let's say now you're trading with a $100 account and you're still willing to risk only 10%. Well, that's now $10 of the account. And you can see that scaling up more and more and more, right? So as you get to the thousands, to the hundreds of thousands, that 10% just becomes bigger and bigger and bigger, right? So that's why risk will really never change. What you're willing to risk percentage-wise will not change, but how much you're actually risking in the market will change, okay? But this is where you have to be, I would say personally, in my opinion, the most stubborn when it comes to trading. You have to have a very set risk and keep to that risk. Don't overtrade. Don't FOMO, just stick to that plan, okay? In later videos, we're gonna talk about my strategy. We're gonna talk about what I do. We're gonna talk about risk management, how I, mitigate risk, how I really make sure my reward is up there. We'll talk about psychology, so we'll talk about a whole bunch of things, but I just wanted to make this video to tell you guys the 5 biggest mistakes that I make. So again, 5 biggest mistakes are not knowing your why. Your biggest mistake, not knowing your why. Not investing enough in education. FOMO, practice, and the last one was risk management. Okay, so 5 big mistakes that I really want you guys to take into consideration when you're starting this. If you're willing to, or if you want to start this journey with me, all I ask is that you like, subscribe to the video, follow this channel for more videos to come, and we'll just talk about all things investment, all things trading, all things money, right? We'll make it entertaining. We'll try to keep it entertaining as possible. I have a dog. I'm like a cat, though. I just like any little speck, I'm just like, oh my gosh. Anyway, thanks for tuning in, guys. New videos to come, potentially once or twice a week. We're working on it. We'll see how things go. But thanks for tuning in. Catch you guys later.